Welcome back, traders. It's Chris here, and we got another top Forex trade review here. This one by, I remember, Goose. He's been with us for a few years, and he captured this reversal in the Euro US dollar, and he was super aggressive about it. He just attacked it at multiple layers, put multiple trades on here, and caught some of the earliest portion of this reversal from the big price action changes we saw, not just in the Forex market, but globally with the stock markets. And he really attacked this Forex pair here, got early part of the reversal, captured a huge share of the lion's move, and profited heavily. He generated over 8R in this trade. So for every $1,000 of risk, he would have made $8,000 in profit. Just think, doing one trade like that, what that could do for you, your account, and how it could really help you. So we're going to go over his trade exactly in terms of the entry, stop loss, take profit he used, what's the strategy he used, and what are some things that he could have improved upon so that you can see how we trade, how we teach our members to trade and make money trading. So let's go and jump into this here. So here's the screenshot of the trade here. He had 3 entries, and his first entry was right here. He used the same stop loss for all these, got in on the next candle. I believe this is a 4-hour chart. And then he got in on another candle here, and he exited at the same location for all of them. So he was just super aggressive in kind of attacking the early stages of the reversal here. You can see this was the bottom in the Euro US dollar. And just as it started to turn around the very early stages, he got long and really just attacked it well. Now, before we get into the trade, I'd like to mention this is something that we had actually talked about on our YouTube channel in the community section here. We had talked about the change on the 4-hour chart in relationship to the 20 MA and how it was really signaling a momentum change. And so he was paying attention, and he saw some trade opportunities here, and he got really aggressive. Keep in mind, this is after the first major break of it, and that's on this candle right over here. So he looked for an entry, got his entry locations, got in, got long, and made money from this. So let's go ahead and jump into the trade here. Okay, so what I have here is the 4-hour chart in the Euro US dollar. And these green arrows represent the locations that he got in. So here's his first trade, here's his second trade, here's his third trade, and here's his exit on this one here. So let's kind of zoom in a little bit. So this is what he is working with here. Now, again, this is that momentum change with the 20 MA. 20 MA can often act as dynamic support or resistance. And, you know, the relationship with the 20 MA is pretty clearly established. Once it got below it, treat it as resistance, couldn't even make it. Treat as resistance, pop above it, now treating as support, coming back, treating as support, and then popping up again. We had mentioned this to our members and to the community. Hey, there's a momentum change in your dollar. This could lead to a potential reversal. Watch for potential long opportunities here. This is exactly what's happened in the Euro dollar. It's skyrocketed since then. Just an amazing reversal for the Euro US dollar, and he caught the early edges of this here. I mean, he's in basically, what is it, 60 points off the low, not even 60 pips off the low. So he's getting in very aggressively here. So these are his 3 entries. This is his exit. And let's talk about really what he's looking at here and how he traded it, what I like about it, and what I think he can improve on. We have this kind of change in the relationship with the 20 MA here, and then the market just starts to get really bullish. And 1, 2, 3, 4, 5 candles, 20 hours of buying has erased 7 days of prior selling. So strong counter impulsivity to it, taking out a lot of the prior selling pressure. Then you get a corrective structure pulling back, treats the 20 MA as support, holds it here, little two-way action, holds it here, and then just very, very strong buying coming off that here. And it makes new highs saying, hey, look, impulsive, corrective, impulsive move structure here. So he wants to get in the pullback, and his first intuition is maybe this area right over here, which was the top of this here, it might act as support on a pullback. He gets in, and the market starts to go against him. And instead of being afraid or worried or thinking it's a bad trade, he feels like, no, I got a really good read on this particular trade. I think it's going to turn around. I'm going to keep adding to my position here. So he enters another position here, and I kind of see why this one here, this one's okay in terms of my thoughts. It's on this candle that he gets long right here, this blue in here. This one's okay. I personally would have liked to have waited for more of a kind of a pullback to the 20 MA, either bounce off that or get in off the 20 MA. Because then if the 20 MA is truly holding, you're getting in right off the 20 MA or off a bounce, and the market's really saying, hey, look, you know, you're getting a much better entry. It's a much more optimal entry, and you're closer to the mechanism which is providing the support for this currency pair to lift up. This second trade, I kind of get it, but I think it could have been more optimized. This third one I think was really good. You know, the market bounces, comes back up. He says, okay, I'm going to get long on this one here. Then the same thing happens. Price action hits 20 MA, bounces, makes new highs, kind of like a repeat of this thing here. So impulsive, corrective, impulsive, corrective, impulsive, and then corrective again touches 20 EMA. That could have been another optimal location to add into it. But you see how the 20 EMA has changed and now supportive, acting as dynamic support of this pair in this reversal here. These are his entry locations. This is his stop loss right here, 108.25. He's basically saying, look, I want to get in. I want to put my stop loss at or below the 20 EMA. The great thing about this is that if this is truly reversing, well, then the 20 EMA is going to continue climbing. So that means that the 20 EMA, which is acting as support, is pulling away from his risk. His stop loss is here. The 20 EMA is climbing. That means the 20 EMA is naturally, as it's acting as dynamic support, is improving his risk as the time goes on. So this is super, super important. And so he just has all three stop losses there. I think on this first two trades, that's fine. This third one, he could have maybe just put it a little bit below this one here, but we're only talking about 5 pips, which is pretty nominal overall. So overall, good job on the stop loss location here. And then here's his take profit. Now, in terms of why he chose this, he wasn't managing the trade, so he had to choose a preset target ahead of time. He's doing set and forget, his full-time job, family, kids, and all that. So he needs to set his target ahead of time. He doesn't have time to check on this every hour or anything like that. So he set his location here based upon this. So what you see here is this kind of boom, 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 and this little spike down. And so he's feeling like, okay, this right here might act as resistance anywhere from here down to here. So he's choosing his target just below resistance in case there's orders there that are going to defend that level and push it back. He wants to get really close to that level and take profit before he runs into the counter trend orders. And so in terms of that kind of strategy and technique and choosing his location and getting in just below where he thinks the order flow is going to come in, I think it was a well-chosen location. Now, if he was managing it, well, then I think kind of like we talked about in the other videos, this would be a great opportunity to trail with the 20 EMA. 20 EMA has not been touched since this here on February 26th last week. So it's just been super bullish. This is very high momentum. We've pulled away from the 20 EMA. Mathematically, when you pull away from the 20 EMA, that demonstrates high momentum or increasing momentum because you're separating from that moving average. And other than a brief pullback here, we've pulled away from it even more. So he could be trailing this and continuing to capture that, but he's only doing set and forget. That in terms of location, in terms of why he chose the location and how he's trading set and forget, I think it was an optimal location. I understand why he feels like that. This was a large area of 3 touches kind of here, potential resistance, could act as resistance ahead. So I get that. I think the only other option is set and forget, maybe target right around here, and these kind of spikes right over here. But overall, I think he nailed it on the target in terms of his strategy and trading style. The only thing that I would optimize on this one here is really this second entry. I think you can let the corrective pullback play itself out. If you really trust the 20 EMA is going to hold as support now, then get in on the 20 EMA or just above it, stop just below it. It would have improved his location. And let's see, he got in at 108.41. So he would have got in right around 108.32. That's 8 pips less, and with a stop loss at 13 pips below. So right here, he's in at 40, and he had a 15 pip stop loss. If he had gotten in on a touch on the 20 EMA, it would have been about an 8 or 9 pip stop loss. So that's a big adjustment. You're literally cutting the stop loss in half and thus improving your overall plus R. So other than that, great job to Goose on this one. I like how he was not worried or panicked when the market literally went negative the moment he got into it. Sometimes that can be a very bad sign, but he felt confident in the overall price action context, order flow, and structure that this was reversing. So he said, you know what? I like the prices here. I like how it's holding. I'm going to get in again. I'm going to get in again. A lot of new traders, they often are afraid that when the market goes negative, that they made a bad idea. They start to have thoughts in their head. Oh my God, they make another loss. It's a bad decision. I should just trade the opposite way, I think. And why does it always go negative as soon as I get in? There's just all these thoughts that go through newer traders' heads that aren't confident, that don't trust their skills. And he didn't have any of that. He just felt like, I feel confident in this. I'm going to keep attacking this. And he stayed aggressive and patient and confident throughout. And he was rewarded with it, with a very, very profitable trade. So congrats to Goose on this one here. So that's pretty much it. I hope you enjoyed this video. I look forward to your comments and questions. Make sure to smash that like button as you always do, and subscribe to our channel if you haven't already. We're active on our channel pretty much every single day, posting commentary, market ideas, and everything. And you'll get notifications anytime we have a new video. Plus, when you comment in the video below and like our channel and subscribe to it, the YouTube algorithm fairies, they love us. They give us all kinds of fairy juice to help our channel grow. which it is growing thanks to your support. We really appreciate that, but we need to keep growing, and we need to keep growing subscribers and likes and all these things. So make sure you do it for us. Really helps us out as a small channel, and we really appreciate it. So with that being said, I hope you enjoyed this video. I'll look for your comments and questions. Good luck trading. Make sure you're aggressive this week. There's a lot of opportunities, all the volatility, and I'll see you in the next video.